we can talk business finances from beginning a business to multi-million dollar business, and there are differences. The structure is all the same, but it gets more complicated, obviously, with more money involved. So why does business finance matter? So let's look at the quiz a little bit. And on the quiz it says those first sections, we're not going to I'm not going to ask you for the details. And several of you are not involved with the details of the business, and that's fine, of the finance. But how many of you have reviewed your gross revenue for September? Okay. Okay. What about your expense category? Okay. Okay. And what about net profit? Okay. Okay. So why do businesses fail? I want to get down to question number 9 real quick first. So, who or what are your bosses? One of the misconceptions, people say, I want to be my own boss. I want to own my own business. And somebody that owns their own business, it's not that you don't have a boss. You have lots of bosses. So who or what are your bosses? So let's throw out some ideas, some responses. You have a partner. Okay. So you work together on bossing each other. Good. You have to work together, else it won't work for sure on a partnership. Okay.
I put my bosses are my customers, my money, and my goals.
Okay, good. Good.
I put down that my boss is my orders, which would be the customer orders, and my schedule.
Okay. Okay. Yep. So those are good ones, and especially ones that we don't often think about, our schedule. And then Sunshine said money, your finances. We, as small business owners, often don't listen to their finances enough. Okay. I'm going to say this, and I believe it to be very true. Money, finances are never, either personal or business, are never the root cause of a problem. They're always a symptom. I can take anybody in here, I can take 90 days of your main checking account, your personal checking account, and I can tell you what your priorities are. Right? Think about it. Okay? And we can do the same with business. We can look at the financials and see where we're at and what we're doing good and what we're not doing so good. And so many times we miss things. So I have up here perspectives, okay? Every one of you, this is your lucky day. You came and you're $1 richer, minus the cost of lunch. But it didn't cost you quite as much. Okay? You get to take that dollar with you, okay? That's yours. So using $1, if you make $100 a day on your business, how significant is it if you waste or lose $1? Okay. What if how many of you would be glad to waste or lose $10,000 in your business? What if you made $10 million and you lost 10,000? Okay. It's perspective. One of the things over the last many years, I worked for Coca-Cola for 24 years, and one of the things that often drove lower level managers crazy was the amount of perceived waste. Spending money sometimes just didn't make sense sometimes. And when you're talking a multi-billion dollar company, every manager in that company has to own their department and be wise in what they do. Okay. I struggled with it some, like Sunshine said in my introduction. My last few years at Coca-Cola, I managed a large $25 million project. And when you're managing a project that big, there's inevitably some waste. There's going to be a little bit here and there. Hopefully not too much, but it would drive me nuts sometimes seeing some of the different groups and how they spent their money. I wasn't accountable for all of it, but I was accountable for what we spent. And so it was sometimes difficult. Okay. And over the last 15 years or so, one of the things that's changed in my life or helped my life to change a lot is learning perspective matters. Okay. We can take any topic and everybody in here could see it a different way because of your past, your present, things that have happened in your life, your age. Everything impacts our perspective. And so my perspective on a lot of things have changed. So today we're going to talk business finances, and you have a choice. You can take it or leave it. Okay. Hopefully, I'll say something that hits home and say, you know what? If I would just do this one thing, it will help me better in my business. That's my goal today, is give you at least one thing that can help you. So today we're going to talk about three main topics. Okay. How to fail a business. And kind of, if you would give me a signal at 20 till, I would appreciate it. And then I don't have to keep looking at the clock. How to fail a business through finance. If you know how you could fail, maybe you can avoid that, right? And then finance terminology and financial reports for business. And we're going to talk very basic and explain how it gets more complex later. Okay, so as your business grows, it'll give you some future opportunity as well. The number one cause of business failure in America is cash flow. Okay? In the first 5 years of business, 50% of businesses will fail because of cash flow. Now, there's other reasons to fail too, but cash flow. And we're going to talk specifically about cash flow, what it means, and some very basic things about that. Other ways that businesses fail are borrowing, which borrowing money impacts cash flow. Okay? Because when we borrow money, we now have a monthly payment. A lot of times we think spread that out, it'll be easier. I never had an easy monthly payment. That's what they say. 4 easy payments. Never had one. Okay? And so, growing too fast is another problem that causes business failures. And often growing too fast ties in to borrowing money, which then impacts cash flow. Then something changes, you can't pivot quick enough, and boom, you're out of business. Okay, so it is very challenging. You don't have a budget, that can cause issue. Insufficient cash reserves or sinking funds. We're going to talk about what that means. Okay, every business should have cash reserves, sinking funds, and should know their cash flow. Okay? So let's talk about that. Let's get into some finance terminology. Now, I'm going to take in a couple minutes after we get through finance terminology, I'm going to open it up for questions. So if you have questions, just save them up and we'll try to answer them. I am not a CPA. I am not a lawyer. I have well over 40 years of experience in small business, and in finance. And so I'm a very common sense, practical guy, and I've learned a lot of things not to do by doing them wrong. Okay? So, finance terminology. Let me back up here because I hit the button when I went like that. Gross versus net. Okay? So, gross is the total money that comes in, and sometimes it's very gross. I think that's where they came up with that. September, very gross. And what's interesting, as you do your finances, we'll talk about it more in reporting, but you should be looking at your finances at least monthly. As a business gets larger, it should be weekly, but at least once a month. What are my finances? What was my gross revenue? And all the different things that we're going to talk about. So, gross, total money in, net, that's what's left when everything's paid for. And hopefully there's some left. Okay. So there's also a term called gross profit and net profit. Okay. Net profit is the same as net earlier, but gross profit is after your cost of goods, but before your expenses. Okay. Costs of goods are expenses, but it's what it takes, labor, materials, things like that. What does it take to make what I make? Then I can see, okay, that is cost of goods. That's a good way to look at, am I truly making money for my labor? Okay, and labor can be in uh, actual labor for making the product should be included in cost of goods. Labor for administrative purposes is not included. Okay, so Kaida mentioned she makes cakes. So all of her ingredients, all of her equipment, anytime if she has to buy a new spatula or a new utensil or her wax paper or her all the things that she uses to make the cakes are part of cost of goods. Okay, and that should be separate from other expenses that aren't part of making that product. Okay, so actually wax paper might be considered not part of making it, or it could be part of it, depends on how she uses it. Okay, and so different things could fall different places. You have to determine where you're going to track it, and track it in one place, and then you know where it's at. Okay, um, cash flow versus profit. Cash flow is a fun one. We like cash flow, right? Now this is a really good visual. We always like that in basket to be fuller than the out basket. This business is doing really good, right? At least right now, until they pay all their bills, right? Okay. So, what do you call it when there is more cash going out than coming in? Deficit. There's actually a term. It's called negative cash flow. Can you have a negative cash flow and still be in business? Not for long. That's it. That's a good answer. You'll have, it's very common, or especially with startup businesses, to have a month that is a negative cash flow. Okay. I'm pivoting one of my businesses right now, so I've got some negative cash flow. But I had enough months of positive cash flow that there's enough reserves to cover that. Okay. And sometimes in a small business, you might do that even on purpose. Okay. You want to take a vacation. And so you have a negative cash flow in your personal business. Okay. So now there's another term for it, government, right? Often we see government have a negative cash flow. Now, that can't go on forever either. So that can be a problem too. Okay. Operating cash. Operating cash is our daily expenses. What does it take to keep me open today? Okay, so payroll, our salaries, things like that. Utilities, maybe gas or fuel for equipment. Office supplies. Things like that are our operating expenses. They're not part of the cost of goods, they're operating. Okay? Finance or cash reserves. Now, cash reserves, there's two types of savings. Cash reserves are for emergencies, downturns, unexpected expenses, and it's recommended to have 3 to 6 months. It is rare for a business to have 3 to 6 months. Three, maybe, but it's hard to get 3 to 6 months of cash reserves. What companies made it through 2020 and 2021? Either they had cash reserves or they happened to be in an industry. I was reading an article about a plastic plexiglass company, a lady that owned a small plexiglass company in Houston, and her competitor, competitor, decided to no longer do plexiglass in 2019. 2020, she had her biggest problem was growing too fast. Okay. And so she pivoted. She did a lot of things right, and it's a multi-million-dollar business now, and still doing lots of plexiglass business because there's still lots of need for it. Now it's not so much what it was in 2020, but it's other things. And she established the customer relationship through 2020. So cash reserves are critical in a small business. Okay. Can't say too much about it. Try to get a little bit put aside every month, even if it's $15, $100. Put something aside and don't touch it. Leave it alone. Okay? That's cash reserves. Now, the other side is sinking funds. That's the other savings account. Sinking funds are specific for something. Okay? We're going to need a new computer next year, which is probably most every small business, right? They're good for maybe 2 or 3 years, 4 years. I may need a new software subscription. I may need something else. My business is growing. I'm going to need another piece of equipment for this person. That is what you use a sinking fund. That is looking forward. What are we going to do next year, the year after, 3 to 5 year business plan? Last month, Seth talked about strategy. I don't know if he talked about 3 to 6 months because I wasn't here and I wish I would have been, but 3 to 6 months or 3 to 6 years. I'm sorry. You do a 1 year, a 5 year, 3 year, 5 year business plan, very common in business. Okay. Do you know what's going to happen 3 years from now? No. Should you not plan anything? No. You should have a vision of where you're going. It may totally change, but you should at least have a vision, a goal of what am I going to do 1, 3, 5 years. That impacts what we're going to do for sinking funds. Now, just by way of fun, the slide there on the right, the bottom right, does anybody know what that is? It's what? Nope. Nope. It is a packaging machine in a manufacturing facility. Now, I actually got to be in a manufacturing facility where they had one of those. It's a robot. It's robotic. And they had 40 robots in one of those, 40 of those arms inside, packaging cookies. Okay? Very cool. Very interesting. Well, here's why they went to it. Two reasons. And that's interesting. A lot of people think, oh, automation, we're losing jobs. They lost no workers. They didn't have enough workers. They couldn't get enough workers. They could not hire enough people. To do what that machine did would take 25 people. And they couldn't get enough people to do it, so they had to go robotic. The other factor is wages. Wages go up to a certain point it's cheaper to buy a robot. When you got 25 people making $15 an hour versus 25 people making $30 an hour. So, yeah, it's great to make more money until now. What it did do is it added a couple jobs at $40 or $45 an hour because people have to be able to work on those. So it's interesting, when you see, and like I said earlier, perspective is very interesting how it, and my perspective on a lot of these things has changed over the last few years because I get to see things, I've gotten to see things like that. And it's like, I know years ago, Coca-Cola put in a warehouse that was all robotic. And everybody said, oh, they're doing away with all the forklift jobs. They ended up with more employees at higher pay when it was all said and done. Okay. And so automation, it can replace jobs, but most of the time it's not necessarily replacing jobs. It's just you can't get enough people to do it. So you got to do something different. And so it's very interesting in the manufacturing. So sinking funds for equipment, if you have a car that you use for business, you may need a sinking fund to replace that car. Okay. Okay. Let's talk business. Any questions about terminology? Any of those terms? Any questions? Everybody good? Either I explained it really well or not at all. Okay, business reporting. Here's where we get down to the nitty gritty of what you need to be doing in your business. And every business, no matter how big or small, should do some basic things. Okay, so you have a packet there. And if you'll open up your packet to the second page, it says at the top, example Schedule C, profit or loss from business. Now, this is what I call, or what we call, a chart of accounts. Now, a brand new, very basic business, and I'm going to talk a little bit more about this in a minute. Number one, you need a business checking account, separate from personal. We'll talk about why in a minute, okay? But that could be your chart of accounts for a very basic business. You have your gross income at the end of the month. You have your expenses. You can do it from a bank statement. That is a very basic chart of accounts, okay? And if your balance goes down, you had a negative cash flow. If your balance goes up, you have made a profit. You had a positive cash flow. Real simple. Okay. Now, as you grow and as you move forward, your business is going to grow and you need to be able to pay more attention to specifics. So, for example, if you look at this, and this is a great example, what this is a Schedule C. Anybody know where that came from? Well, this says QuickBooks, but also, where did it? No, don't say that. Yes, but where else? Where did QuickBooks get it from? The IRS. Schedule C is the IRS form you will file if you have a small business. Okay, so it's a great starting point. You may not use all of the account categories, or you may need to add some. But for example, part one, income, gross receipts or sales. Okay, this company, this fictitious company, had $978,456 in gross receipts. Okay, I wish I could say this is an example of my account from last year, but it's not. Okay. Then returns and allowances, and then it shows your gross income. Now, your business might just need the line item gross income. Real simple. Okay. Cost of goods sold, that is an accumulation of one of the next categories or groups, but that comes up, and then I have my gross profit, other income, total income. Okay, and then expenses, advertising. Now look under car and truck expenses. I actually put some spaces in there. I had lines, but they didn't show up, so I apologize for that. But I want you to jot down 2 or 3 subcategories under car and truck expenses that you might want to track? I'm going to give you about 30 seconds. Okay, what did we put? Maintenance, okay. Okay, oil changes. Yep.
Tags,
Tags.
registration,
Okay, registration.
and insurance,
Insurance.
and gas.
Okay, and gas. Okay. You may or may not have reason to track those individually. If you have a company with a fleet, you probably want to be looking at your fuel. Because guess what happens? People use those cards for other things, okay? Contract labor, depreciation, those are really good. And that's exactly what we need to think about. And the way you determine if you need a subcategory is a couple ways. Number one, how much money am I spending on it? If I'm spending a chunk of money on it, if I spend $10 a month on gas, I really don't need to worry about it in a $100,000 business. That's very reasonable, right? But if I spend $100,000 on fuel, it's something to pay attention to because it's easily manipulated. Okay? You need to know your trends. Okay? And you can take that and say, oh, our fleet ran, 1,000,000 miles. So $10,000 gallons of fuel. Oh, that's good mileage. Really good. That's 100 miles a gallon. And that's really good. So just numbers out of my head, and they didn't correlate well. But that's how you cross-reference different categories and see if your business finances make sense. Okay? Okay. So I'm going to have to move along quickly. We got a lot to cover yet. So just the whole list, if you go down, I look on page 2, office expenses. That's another one that you may want a couple subcategories. You may, depending on the size of your business, okay, you may have something that you need to buy a lot of for your office, and you need to track those things. So you may be able to just track office expenses. Most of our businesses, we just do office expenses. We don't have any breakdown, because we don't spend enough on it. It's usually a few $100s a year, okay? And I know the employees, okay? So they typically don't misuse things, okay? So it all depends on your business, how detailed, how many subcategories, and you may even have a third layer, okay? Depending on, Coca-Cola had multiple layers under some of these categories, because to break it down to the level where you could really track it. So that's a chart of accounts. Now, I will tell you, a lot of small businesses have way too complex chart of accounts. If you just take QuickBooks out of the box, it's going to give you more than you need. You don't have to use them all. You can remove them. Okay? Okay. So, chart of accounts, very important. The next thing is key reports, profit and loss statement. Now, I made the packet and I forgot to print this out, so it's on the back. Okay, so the last page, I believe, yeah, the last page, profit and loss statement, should look like, it says widget and things, profit and loss. Should look like this. Should be the last page. Okay, so a few key categories you're going to want to look at. Revenue, that's your income, right? Gross profit, total operating expenses, and then net profit. Those are things you should be reviewing every month. Now, you can get into the nitty-gritty, and you should. If you have a good P&L, it's called a P&L, profit and loss, it should take you, on a small business up to a couple 100,000, it should take you about 10 or 15 minutes a month to review it. If you have a few employees, it might take 30 minutes. Okay? The larger you get, the longer it's going to take. But even a large company, of course, then you have sub leaders and they take their area and they track it. And so everybody, 30 minutes a month or less to review this. Now, it takes some time to enter this stuff, but there's all kinds of electronic and easy ways to track finances nowadays. Very easy. In your bank account, a lot of times nowadays they have budget categories. In your business account, you can make those your business and you could just move everything into those when you spend it, and boom, at the end of the month, you got your profit and loss statement. Okay, doesn't have to be overly complicated. I'm actually in the process of ultra simplifying ours. Okay, because it's been needed to be more complex. Now we have a need for it to be more simple, and I'm working on that. Okay, so profit and loss, a balance sheet. A balance sheet gives us a view of our financial position, assets, liabilities, and equity position. We're going to look at one in a minute. Okay, you have a copy there, and we're going to pull it up here in a minute. Cash flow statement tracks the inflow and outflow of cash, like we showed earlier. That's very, very important. That, again, is the number one reason for business failure in the first 5 years. 50% of businesses. So in here, we would have 4 failures in 5 years. That's normal. That's a lot. Okay. Okay. And then frequency of review. We're going to talk about that. So let's look at these categories. Income statement. If you have a good P&L, a good reporting system, you should be able to pull these up and look at them. And it's just going to very quickly tell you what do you see different between the left one and the right one. Okay, what's interest expense? What would that be? That would be on debt. Okay, this business has $20,000 in interest a month. Okay, I'd rather have that in my pocket. And here's the same businesses with a balance sheet. You notice, look at the equity difference because they had a $200,000 piece of equipment, $200,000 debt. Okay? Huh? The liabilities, loans. If you have zero liability, you have more owner's equity. The business is worth more. Okay? Because you don't have any liens, it's worth more. Yeah. Cash flow statement. Pardon? Hey, the more you stay out of debt, and by the way, I haven't borrowed. My wife and I have not borrowed money in 20 years. Okay, and we started a boat rental business cash. Okay, and you know what? We could make different decisions because we didn't have to worry about that. It made us run it differently. Okay. When it came time to close it, when we did close it, it was not a big deal. Okay. You make different decisions when you have debt versus not. Period. No exception. Okay. I like cash businesses. So, how often should we review these reports? At least a month. The bigger you get, I used to review when we had the boat rental business and we had like 4 businesses going at once. I reviewed things every week. Okay. If you've got something that's got a lot of cash flow moving in and out and a lot of expenses, you need to be weekly. Okay. If you just, everything kind of flows by itself. Now, one of the other things that's a big impact is, are you doing things like government contracts and things like that? Okay. Or school, or if you're doing business to business, they may have a net 30 days or a net 60 days or a net 90 days. You get to have a say so in that. What's interesting is I contracted for Coca-Cola after I left Coke, and Kaida contracts for Coke. She submits her invoice and she usually gets payment in a week. Mine was 60 days. Okay. And I mean, that's if I got it in 60 days. So when you have those types of net payments, and sometimes you can change it, sometimes you can't. I tried, I couldn't get them to change it. I was making enough money, it didn't matter. So I still got my money and it was working. But if you can't, you need to figure out how to have the cash flow in between. And so that's why multiple incomes are better than one. Okay. So it's at least monthly, and it might not take you 10 minutes. You might look at it and say, I don't know why I'm looking at this. It's everything's fine. I know what it is. Okay, that's good. My brother owned a computer software and or hardware and networking business 30 years ago, up till I think about 2010 or something like that, for about 20, 25 years. He had somebody doing his accounts receivable and stuff. He had about 5 or 6 employees. And after that person left, he got looking at all of his statements that in business financials that he wasn't looking at, and they left with a nice bonus. They took money with them, a pretty good chunk of money. That hurts. Okay. I there are I can I know people that have had that happen, and sometimes they're very sophisticated and it's very hard to see. Most of the time it's because the owner isn't looking at the bottom line. They're not looking at the reports. If you have employees, if you're a growing business especially, you've got to look at that information. Okay, I can't tell you enough. Okay, everyone should have a separate business account for a checking account for their business. Do not run personal expenses through your business or business expenses through your personal. Don't do it. It'll get you in trouble more ways than than a highway. Okay. I threw this in here. If you have questions about it, I'll be glad to try to answer them. Again, I'm not an attorney, but I have done a few different kinds of businesses. Most common for small businesses is sole proprietorship. The next most common is an LLC. Some accountants and stuff and lawyers will try to talk you into a C Corp or an S Corp. Be very careful. Rarely is it worth you doing a C Corp or an S Corp. It's a lot more expensive and a lot more complex. And one reason for them to get you to do it is then you need them. Okay? So keep it simple. Pardon? Yeah, keep it simple. Go see Galen and get it right. Okay? And partnerships, there are ways, and there are like legal, and a lot of times lawyers, doctors, and accountants do good partnerships. Most of the time, everybody else don't. Okay, I don't know what yours is set up like. I hope it's set up well. It is risky. Okay, your own. Okay, yeah. Okay. There are sometimes there's necessity, like lawyers are almost always partners, doctors a lot of times have partnerships, and that works. They have, because there's proven plans. But be careful about individual partnerships. Just be careful. There's ways to do it, but be careful. Okay. Pardon? Yes. And cover all the D's. What if we're going to dissolve? What if somebody's on drugs? What if there's divorce? What if, yeah, all the different D's. If you cover, there's like 6 or 7 D's. If you cover, it's better. That doesn't mean it's good. Okay. Yes. 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 Okay. So, summary and takeaways: get wise input into your business finances, watch your cash flow, build and maintain cash reserves, have a good business finance tracking, whether it's your checking account or software or a spreadsheet or a ledger. And then, big one, review your reports consistently. Questions? I finished before 1. Okay. How do you increase cash flow? Um, One way is decrease expenses. You got to think all the ways. Customers. Sometimes it's marketing. Sometimes it's worth spending money on marketing in order to get more customers. Sometimes it's not. Be wise in your marketing. Sunshine's our marketing person, and I think you'd agree. Uh, um, here's one thing I've learned. When you think you've thought of all the ways, you haven't. Think out of the box. Okay. Um, my oldest son, I've told him many times, he needs to be a business consultant. He's not. He has a small business that's actually grown to be fairly large, and he works a full-time job. And so, but he thinks differently than everybody else in the world. We used to lead a teen group, and he was in the teen group when he was a teenager, and that was 20 years ago. But he, we would, I love making up my own games. Okay, and so I would go to the dollar store and go through the dollar store through the kids section, and I'd see something and I'd say, "Oh, we can make a game out of that," and I'd make up a game and I would define the rules. Inevitably, his deal was, you didn't say I couldn't. So he would crash the rules every time because he'd say, you didn't say I couldn't do that. No, I didn't. You're right. And that is a good way to look at your business. Nobody said I couldn't do this. So, what are the things you're not doing in your business to get customers that maybe you could do? Okay. And maybe that is getting somebody, a third party, to sit down with you. I am, I am, I'm a, I'm a, I do consulting and coaching. Okay. And most of my consulting is with Fortune 500 food and beverage companies. Okay. Most of my coaching is financial. But one of the things I've learned, and 15 years ago, I would not have hired a consultant or a coach. I thought it was biggest waste of money. And I've learned over the last, especially 15, 20 years, there are times when I need somebody else to look at what I'm doing and help me do it. And I've failed enough to know that sometimes my failure is because I didn't listen to other people. Okay. So I'm not trying to, if you want to talk about coaching, I'll be glad to. I'm not trying to sell you, sell you. And it might not even be me. I might say, I'm not the right person for that, but here's somebody, find somebody that is, or here's somebody that could help you. But think about what are the non-traditional, what is everybody else doing? And what can I do differently to get my customers? Okay. Now we're into marketing, but it's part of finance, right? It's a good question, though. I don't have a perfect answer, but you gotta brainstorm, think differently. Yeah. What else? Any other questions? Okay. By a raise of hands, I'm going to put myself on the spot here. How many of you got at least one thing that you can take and apply to your business that you think will help your business? Yay. Good. Okay. And don't be nice. If you didn't, that's fine. But okay, yeah. Exactly. Exactly. Yes. Depends on your business. I my our businesses, most of them have one or a checking and a savings. It's real common to have a, I would say probably at least a checking and a savings, because your savings becomes your sinking fund and your retained earnings. But make sure you identify how much is each. Don't just say, this is my saving. If I'm saving some for, it can be in the same account, but maybe it should be, maybe it shouldn't be. It depends on you. If you can put two things in one account and keep a track of which is which, fine. I can't. I have way too many accounts that that's one of the things I want to simplify. But yeah, if you have a good software that can help you manage that, great. But if you can't, then you may need a sinking fund account, a um, retained earnings account, and your checking account, which is your expenses. So probably two minimum, maybe three. And then if you have several people working for you, you might need another account or two. Like if I had employees that I was letting spend money, I would have a separate account from my main account, and I would limit that how much is in there. Limit your damage. Okay, potential. Okay, awesome. Thank you for being here. Hopefully it was helpful. It looks like it was, and appreciate you showing up. And we'll keep inviting people and trying to help people.